This episode is intended exclusively to provide information and education to help individuals better understand cycles. However, this information is not be construed as professional advice as to the buying and selling of securities or other investment instruments. In no event does the host express any opinion with respect to or make recommendations regarding the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading securities. Buying and selling decisions are solely within the personal discretion of each individual.
From the mind of Lars von Thienen, the most advanced cycle analysis, hot off the press.
Yeah, nice to see you. Welcome to another episode of Cycles TV. Yeah, today let's have a look at Nvidia, right? And if you see this kind of chart, I mean, isn't this a perfect parabolic move? It is. No one can predict when a parabolic move will end, but we have a condition. We have a condition if we look at our cycles.
Remember, what goes up must come down, and baby, you've been flying too high.
Yeah, you might remember that jingle. I mean, Nvidia, and this week is interesting. I wanted to bring this analysis across to you already last week. Was not possible, so let's now do it this week. Nvidia in Dow and now. So let's see if the cycles can give us a condition. And as I said, if we look into the cycles of Nvidia today, we will identify special condition based on time-based cycles. And that's important to say upfront. What we're doing here is not a prediction or a forecast of the price of the Nvidia. What we're doing here to identify the dominant time-based cycle in that asset, which can that give us a hint or a clue of possible windows of opportunity or windows of time when a possible change in trend could occur. But that's a timing window. This does not mean it is a correct price prediction. What we need is a kind of trigger. And if we get a trigger in the window based on time-based cycles, that's then the interesting point to maybe derive decisions. But for today, we focus on the window of opportunity, the so-called condition based on time-based cycles. And I tell you that upfront because on Wednesday, we will have the latest release on the Nvidia earnings. So it's interesting to know the condition upfront if there might come a trigger then on Wednesday or even after. So that's why I think it's good timing to have a closer look at Nvidia today. As always, let's start with the weekly chart. I already started to share you the raw price chart of Nvidia, and let's get into our cycle analysis studio to see what the long-term perspective might show us. By the way, you might see this already. We are talking about weekly series first. So the long-term perspective, weekly Nvidia price series here. I would recommend if we see this kind of parabolic price move here, you could switch the view to log scale. Yeah, it's just the way how the scale is viewed. This does not change the way how cycle analysis is applied. It's just a different view to plot the price in log scale instead of the standard scale. So which makes the upswing more visible. Otherwise, we would not see anything on the price scale. So getting into the cycle analyzer screen from the long-term perspective, and as we have even on a log scale, so that's why the spectrum is not as easy as we might think. So we have just this upsloping, straight upward pointing line on a log scale. So in terms of percentage, we are just moving upwards in a straight line, which makes cycle analysis more complicated. And that's why you see this kind of spectrum, which is not so easy to read. So we don't have picture-perfect cycles or peaks in that spectrum, which we would like to get a nice forecast based on a dominant cycle. So that said upfront, there is one valid long-term peak, but not pretty perfect. But I highlight that cycle here because if you have the length in mind, 177 weeks, so we're talking about weeks here, you might remember that we here often talk about a dominant long-term cycle of around 180 weeks. which is the so-called 41 months cycle, which is a very prominent cycle in financial assets. And this 180 weeks, 41 month cycle, if you followed this channel here for a longer period, is about to peak. We showed this in the Nasdaq or main indices a long time before. So if we activate that cycle, even though it's not perfect, but if we have a clue about this kind of persistence, which I just mentioned around the 180 weeks, it's also visible now in the Nvidia price chart. And zooming in on the price swings here, that's just the visual check I would recommend everyone to do. So if we find the short-term swings related to that cycle here, we can identify that the main swings also in Nvidia on a long-term chart are in sync with this 180-week cycle. And I think it's clear where we are in that cycle. So this cycle is, as we have seen in other main indices, currently peaking. So we're around the long-term peak from the long-term perspective. So that's per se nothing new. We know this condition on the main tech sector in different episodes here. So it's now more interesting to jump to the daily time frame for Nvidia. So that's now the more important topic for today. Let's clear up everything here. Let's start with a clean daily chart. So here we see the past 4 years of this up run here in our daily analysis. And let's see, the spectrum is, we have some sharp peaks here in the shorter term. And we also might have some, one longer term cycle here. So there are some basic rules which we can apply to that spectrum here. And therefore, let me guide you through the framework we apply here every time the same. So we apply very objective measures, how to pick the cycle, which cycle to pick, which is the basic concept we try to educate or at least showcase here on every possible asset. So therefore, if we look into the spectrum from the longest possible cycle, we clearly see there is a cycle with a length of 324 days in that case. There's nothing to the right, and even the right shoulder is coming down nicely, even to the left side, not as far down as below, but for a longer term cycle of that amplitude, this is quite a valid one. In addition to that, we also see that the Bartel score is at a high range. So it is also picked from our AI guided reference here as second ranked cycle due to the shape in the spectrum, and the Bartel score also validates the statistical significance. So this is one cycle to pick, and the other ones are then shorter term cycles. So for example, I would exclude this cycle here because this is not a really valid peak. So the right shoulder, the downside move is not enough to qualify for a peak. Same for the left shoulder. So it's very flat, and the right and left down move here for that peak around 220 days is not qualifying for a valid peak. So if we then move over to the left to identify more shorter possible cycles, the next ones which come into play are those two here. So one with a length of 81 days, which is quite sharp. So this is a nice peak we want to identify. We could really not decide if 81 or 93 would make a difference. So I think we need to view both of those cycles, even though they are very, very closely aligned in terms of length, but they could have different phases. So we need to monitor those two here. And then if it comes to at least a very short-term peak, which is also shown here with a circle around this huge triangle. So this is a huge triangle, which means that cycle with a length of 50 days, which is standing out. So really, if you see all shorter-term peaks here, this one is really standing out of all the shorter-term peaks possible here. So therefore, we should take this into account. If it would have the same height as all the other ones here, I would ignore that one. But it's standing out, and the large triangle shown by the blue triangle here indicates it has a high strength. So it seems to be that the 50, 81, and 93-day cycle have a big influence on price movements. That's how we read the strength information, which is also shown here in the table, in the upper table. So that's the reason why those 3 cycles are also ranked here on the top of the list. So first, the reason they are on top is the strength score. So as I explained, they have the highest strength. So those 3 cycles have the highest impact on price changes in that series. And in parallel to that, they are also ranked based on their visual shape as 1, 3, 4. You know, the second ranked cycle based on shape is this longer term cycle here. So that's why those 3 cycles also make sense. So we need to take into account possible 4 cycles here now, which could be interesting for further analysis. But that was just the procedure to give you some kind of information. What's the framework to now decide which cycle to pick from that spectrum? And that's our basic rule set we always apply. So we now have these possible 4 cycles. The first thing I would point your attention to is the color of those 4 cycles. So the background color here behind the length rating. That's the first. Even though we don't put on the cycle plot, we can easily identify that all of those 4 cycles have a red background, or this one here is still orange, but a red dot on it. So this will also change to red in a short amount of time, which means that all these 4 cycles are pointing downwards. So that's already what jumps up to my eyes. So it seems like the phase which is ahead of us from those 4 cycles, they all agree. They all agree. I don't need to put them on the chart. They all show us, it seems like there is a really headwind in regards to time cycles in front of us. So therefore now let's study those cycles a little bit individually. I will put on all 4 first, and that's what I mentioned. This is now what you see here also on the screen. All 4 cycles share a similar phase, which is a downward phase until end of this year. This is why they have been red. But now first, let's go from the longest to the shortest. So the longest cycle already peaked here at the major summer top, I would maybe conclude. We see we had the initial top in July this year, and the down move came in, and then another up move. And then now it's the question how we judge this up run here. We made a higher high in Nvidia, but we also know that other tech stocks didn't make a final new high. So that's up to decision. So the longer term cycle has already rolled over since summer, but has time to move on into even February, March next year. So we're even not at the half point of that cycle. So this is still valid or in force. We now have a view to the more shorter term cycles. So let's start with the 81. And you see this is more the current rhythm, which can be closely tracked by the 81-day cycle. Let's now compare this one to the 93 days, which is quite similar. And you can observe this. I just place a red line here. So here's the high, here's the low. So this is the forecast area we are interested in. And if I just put in the 81-day cycle, there's no real change. If I just put in the 91-day cycle, there's also no change. So there might be a discussion if it's more here or here, but in regards to those both cycles are in sync, and if we put on both, we are exactly in the middle of those 2 possible areas. So those cycles are in sync in regards to their topping projection. They both possible top in that area. And let's see where the 50-day cycle would come to a conclusion in that same area. So it's here. So we have 3 cycles which are currently topping in this window here. That's really cycles within cycles alignment, which we have here since end of October until early November. So all 3 short-term cycles are topping now, have topped. So the last cycle with 93, I would assume, 93 is just rolling over. So just using these 3 short-term cycles, you see it looks like as this would be just one cycle, right? So it does not really look like 3 individual cycles as a composite. So I just enable that. So it's more or less one cycle, even though it's a composite out of 3. In regards to their phase and timing, they really have quite nice alignment here. And you see what happened at the times when those 3 cycles agreed the last time. It has been here, has been here, it has been here, it's been here. So that's the alignment, and now the next upcoming window is just, we are just due in that window here. So the last time we had those alignments of 3 cycles, yeah, remember 3 cycles, it just looked like we had this nice swing here. And this now all comes into the window where the 324 day cycle is still in its downswing. Yeah, and you see if I now activate this long-term cycle as the last possible cycle to the mix, you see that it shapes a little bit the overall, or you can see it as a long-term trend, which even emphasizes the downward acceleration of all 4 phases now into at least end of the year. And then we need to see which cycle overrules the other cycle. But I would call that's window of opportunity. That's a condition based on time-based cycles we should monitor. Especially, as said, we now need to get a confirmation by a trigger to the downside. As you know, I mean, there's lots of momentum, there's lots of hype, there's lots of emotions in these AI hype still. So we should not go against that momentum or that trend, but we now have a window of opportunity that that trend, that those emotions might come to an end if a trigger is now joining. And therefore I would see, let's see what Wednesday is showing us. But it could be interesting if some trigger kicks in. And Nvidia had anyhow hard times in the past 3, 4, 5 days already, while we had all other tech stocks often moving upwards, while Nvidia failed to do this already. So that's quite interesting here that, you know, the last 4 or 5 days. So even the last 1.5 weeks, yeah, if you see that window here, we have moved down already. So that's the short-term possible window, and I've shown you the long-term 180 weeks perspective just before, so that even syncs again into the long-term perspective where we are now switching to a long-term downward cycle, which is quite interesting to be on alert for that week and Nvidia. So that's the basic analysis. Now, before I will jump to your questions, and please start to put in your questions. I see something Goldorak and Juicebox already. I will come back to your points later in a second. But what I always recommend now is to complete your analysis with some technical stuff. And therefore, let's... Oh no, that was the wrong button. Wait. With the CRSI, and I would always try to use the shortest dominant cycle for fine-tuning the CRSI, which is the 81-day cycle. And if you're following the principle how to use cycle length for tuning technical indicators, we use half of that length to fine-tune technical indicators. That's why for the RSI or the CRSI 40 is used. And here we see now at the bottom, so now we can concentrate on technical analysis. Here at the bottom, we see the status of that technical indicator, which is hovering around the upper band. And the signal line has now crossed on 12th of November to the downside. So already exactly a week ago, which is a technical trigger for a possible signal. This is what we want to see in alignment with the cycles. So this trigger showed up exactly here at the past high, which is or here the secondary high, which was at that point in time. So here we have the trigger signal, which is coming into our window of opportunity. Now we need to wait what happens Wednesday to see how we get the emotions into alignment here. Another interesting observation from the technical perspective is that we have seen here Nvidia making higher highs, from here to here. This is not confirmed by the technical indicator, as this is even making a lower high here compared to this one here. So we have the technical divergence between price and indicator, which is also possible signal that price now might reverse or at least correct to the downside. But that's not my recommendation. That's the standard way how to read technical indicators in combination with time-based cycles. But I think it's an interesting situation now. And I mean, let's see again what happens this week. At least I think this Monday episode can help you to give a little bit of context to the markets and to the news based on time-based cycles. Okay, that's the analysis I wanted to share with you this week. We can review next week after the fact if we got a trigger this week. Let's now spend at least short-term some time dedicating to your questions. Maybe Juicebox, let's start with your question. Why not skew the tops in the longer term cycles translate to the right? Yeah, that's an interesting point, at least to also now bring the topic of skew into the analysis. So I like that topic. So let's do this together. We don't need the CRSI. So what you mentioned, at least for the long-term cycle, what you mentioned here, then that's correct. Maybe upfront, long-term movements in financial assets in most cases has a skew factor, which means that the downswings are faster and shorter, and upswings are lasting longer in regards to the cycle length, which brings a non-synchronous cycle in terms of the lengths of the upswing and the downswing, which in our theoretical way or theoretical world is always equally distanced. So the duration of the upswing is always the same duration as the downswing. That's the purpose of a perfect cycle. In financial assets, the cycle length stays, but within that length, the time of the upswing always takes a little bit longer than the downswing, while the overall length, in that case 325, stays the same. And that's the so-called skew factor. And we can take that into consideration within our cycle scanner advanced settings, which allows us to bring that skew factor in financial assets into the analysis. And if we do that, you will see that this skew is applied to the cycle length of 324. What this means is that this length here from top to top has not changed. So this is 3 to 4 days, but you see that the length for the downswing is now shorter than the duration of the upswing. So that's down and that's up. So even though we have the same overall length of that cycle, so we have not changed that cycle length, but we made it, applied it to that skew. So I think you can see this. And by that, and I think Juicebox, boy, that's maybe the purpose, you see that also shifts that longer term cycle. And that's interesting to mention here, exactly into the center to this. This is up to be confirmed here into that period, which is interesting, as this was more or less also the window of the shorter term cycles. That skew is now generally aligned. So it's also aligned to the shorter term cycles, which, that's quite perfect. By the way, thank you for mentioning that. I mean, you see how that skew gives you an almost perfect correlation to the past behavior. I mean, it's now up to confirmation. But you see, even the skew factor brings in a better fit to that financial asset, which is, and the skew factor in financial asset is nothing special for cycles. This is researched and documented in general in those markets. Thank you, Juicebox Boy, for bringing that in. You could do the same for the weekly. So let's just do it 177. Yeah, which would bring that more right on time. So let's see. It's more now fine-tuning cycles. So the skew factor is only relevant once you have identified the most dominant cycles. That's then if you want to drill in and even more fine-tune the possible window of that timing, bring in the skew, like mentioned here. The parameter, Bruno, I think your question is related to the skew parameter, right? Maybe help me which parameter you are referring to with your question, but I will bring in the options dialog again, which is, and therefore I think it's related to the cycle skew factor, which is a standard setting of 0.35. That's the standard setting for financial markets. You can change the skew factor even if you want to have different skews. So you can have the skew where the upswing is just short and the downswing, the downswing is lasting longer. So from the research perspective, that allows you to apply any other skew factors. The 0.35 just brings in the standard skew factor for financial assets. So you don't need to change that if you are in the standard context of financial asset. I mean, it would be the same if you analyze other data sets like sentiment indices or data sets which have nothing to do with financial data. I would not turn on this cycle skew factor, or at least maybe you need to know what to put in and how to change it. But for financial assets, there's no reason to change the standard settings here. Okay. Goldorak, does semiconductor ETFs harmonize with Nvidia? I mean, that's a good context now to put this into a larger picture of that business area we're talking about. I'm not sure which ETF to chart here, so you might help me to bring in an ID to plot some price charter. If you can put this in the chat section just down here, which symbol you have in mind, I can try to also bring that to the screen, Goldorak. But and in general, yes, that would be the next step to see if the pure Nvidia outlook comes into the perspective of the overall market, or at least of that sector. But the purpose of today was more to give us the context for Nvidia related to their earnings release this week. And I think Nvidia is, I would call that also as a proxy, because a lot of emotions in that semiconductor artificial intelligence place are currently related to Nvidia. So if you have the most emotional asset, I think that's fine. All the other assets will anyhow more or less follow what Nvidia predicts on that road. I mean, we know we have some news for other companies in that area, which I don't know if they get delisted from the Nasdaq today. We need to see. So there are some news around in that sector, but we need to be careful. This could also be random events, or talking about engineering slang, it's just noise then. So therefore, even though the sector would be interesting to analyze, in that case, I would focus on that asset which combines the most emotional market participants in that topic. So maybe, okay, SMH. Yeah, let's see if I can, just give me a minute to cross-check if we can do this here just live. There's a split. I think we did not have correctly in our data. So no, the data is not prepared to do this, Goldorak, but let me write that down. Maybe I can get back to that next week. The data is not validated. I'm seeing here for that. So therefore I don't want to do this without that validated data and some kind of split which has been taken part in May 2023. Otherwise, socks. Okay, you recommend doing socks. Let me see if that data is even fine. Oh yeah. Socks looks better. Yeah, let me bring in socks for a second. Oops. So if you loaded just the data you recommended, here we see the price action, and yeah, we have some cycles which come into play. So that longer term cycle here. Let me remove the skew for a second. I don't want to start with the skew activated at that point. So let's just go by the ones here, just for the quick one, the ones which are ranked by our cycle analyzer. 1, 2, 3. 4, 5. Okay, so that's quite looking different here. So without special attention to the but head and shoulder, that's also nice. You bring that in. Yeah, agree. But okay, now it gets more into complex technical analysis. So what I would pick from the short-term analysis, if I just look at the spectrum here, so that one looks really nice, for sure. So that's the most important short-term cycle I would think of, and charting that also with the CRSI, which is we could see some downward pressure into December. So that short-term cycle is confirming. The other ones are not confirming. So they are diverging. So, but I cannot comment on that ETF. The Magnificent 7. Yeah. I'm not prepared today to do that, but that's a good proposal for next time. And thanks for putting in your idea how to calculate the Magnificent 7 index. At least that's a very good recommendation to do next time if we dive deeper into the tech or the semiconductor index with that. But I need to prepare a little bit better the data. So get correct for me, and Goldorak, please let me do this next time with a little bit more time. Okay, for Bitcoin, I don't want to comment on that, but I see your topic, Mabo 6. We did a really long, intensive seminar last week on that, so therefore I will not try to bring this topic for today. Please accept that. Yeah, that's it for today. I think we've seen now interesting timing situation for Nvidia. So let's wait for Wednesday. Let's maybe revisit next week. And see what the semiconductors and the Magnificent 7 SN index will tell us next week, Monday, same time, same place. I would like to see you again